Hello, everybody, and welcome back to Markets for Millennials. This is the day or two late market recap for the week from November the 8th through November the 12th. And what we're looking at here to start with is the big, in my view, the big news from the last week, and that is the dollar breakout. We have, if you can see right here, if I just kind of trace back what's been going on, we had the initial crisis going into from February into March. We had the initial dollar spike, which you see there. And then ever since then, after a consolidation, it's been steady down through the rest of 2020. But if you think back even into July and August of 2020, we really have stayed mostly sideways. We've been in the over the last few months, we've been in the upper end of this, the upper half of this trading range. You can almost cleanly divide this into really two halves. So you've got this kind of lower end, and then you've got this midline right there. And we've been really since July in the upper half of that, kind of grinding our way up. And a lot of people wondering why, what's going on, how can it be when we're printing money like crazy and all that, and the Fed has been purchasing so much every month ever since the crisis started. How could the dollar be strengthening? And it's really important to recognize that the DXY is really based on a basket of currencies, most predominantly the euro, and the euro has been getting weaker because it turns out that the ECB has been out purchasing the Fed, and so that's something to notice. But I started on the 3-day. We're going to go down to the 1-day to kind of see what happened here. So you see here on the 10th of November, we had just a really strong breakout. And remember, what we had talked about previously was that there was going to be a taper. The Fed had announced that they were going to reduce their purchases. It actually turns out that the purchases were reduced this month so far, at least less than what they had originally said they were going to do. But you see we have a clear breakout right here. This is a level I've been talking about for some time. Again, going back to this trading range that we've been in, it's been it's been back since July 2020 that we've been at these levels. And so we had this really strong move up. And I had previously kind of highlighted this area here. I had circled that. I obviously got rid of that because we did not stay here in this range. What I would be looking to see right now is what kind of follow through are we going to get this week? Are we going to kind of pull back a little and retest and then resume up, or are we going to consolidate sideways here for a little bit, or have we already gotten our pullback? And that's really the thing that I will be watching over the next week. And so that has been pretty significant. And then I think the other big story is that with the dollar increasing, we've also seen equities and then gold and silver, which I'm gonna go to gold and silver first here. You can see that we've broken above a couple key technical levels. You can see that these lines I've got here, I've been cloning all throughout ever since earlier this year and into last year. I've been cloning these trend lines, and this clone trend line, you see we got the breakout and we retested and really strongly resumed off. We've got, we're on to 1, 2, 3, 4, 5, 6, 7, 8 green days in a row. Obviously, here we are Sunday afternoon with the trading just beginning for this next week. So I know that this update is coming a little bit later, but I have been talking about over the previous weeks, we have been getting some higher lows and some higher highs. And this is pretty decisive. The question is, why is this happening in relation to the rising dollar? I think that you can account for the fact that the DXY is increasing because of the euro. But it's interesting to see this dollar rally, as it were, right now. And we're really quickly marching up to levels we haven't seen since June of this year. And of course, here, if you remember here on the channel, we were talking about this being, the sign that gold had bottomed over here in March, basically the beginning and the end of March, and we were marching up. But then obviously we got rejected, came right back down. And so I'm watching, you can see this yellow line I've got here. I'm watching this level. It's basically at 1916. I've got a resistance level there. You can barely even see the line there. That's why I colored that yellow line there. That's all I wanted to see there. And that's what we're watching. I want to see us make a higher high than we did, earlier this year in May and June. And after we do that, then we only have a couple more levels, like key levels, to get to in the mid 1900s before we can be on our way to all-time highs. And who knows? Things can change. Things can happen quickly. But we're seeing this really solid movement in gold, and we're also seeing the same solid movement in silver. This one, actually, I had said previously, had concerned me because even though gold and silver had both been strong, we had broken down from this ascending trend line that I had put in, and I was concerned. If you recall, on my last update, we were right here, and I was wondering if we were going to bounce or get rejected off of this and come back down. But we did not. We actually have kept coming up. And so I think what we would actually want to do here now is take that line and maybe put it there. That's our new line of repair, and or our new momentum trend line. And so as long as we stay above that trend line, everything's looking good. You can see, actually, if you are noticing the faint horizontal lines, you're seeing where we've had the really solid resistance and support marked. Silver, for the most part, has been sideways for a long time now. The big thing that I'm pointing out is that we're getting these moves in the metals, and at the same time as the dollar increasing. So let's also jump over to the yields and see what's going on here. So what I have done recently, we've got a couple things going on here. We're coming up. This solid white line right here is a cloned trend line from back during the rise starting in August of last year in 2020. So it's a cloned sort of prime trend line. So I'm going to darken this back out so it's not in the way. I'm starting to think that maybe this line or these lines are obsolete. A lot of times that happens. So you'll get this like breakdown. So we broke down below and a retest and resuming down. And sometimes you can clone the trend lines and it makes a difference. As you can see, the clone trend line here was, the market was respecting it right in this range. And then ever since then, I mean, for all we know, we could come right back down and test this, and the market could show that it's still respecting it, but it might not be. So I'm gonna keep the line there for now, and we'll see over the next week or so what happens. We are coming to a pretty important inflection point, because you can see that that blue line right up here. I some time ago I marked this yellow line because I was pointing out that this blue line comes from a multi-year descending trend line going back to the 80s, and cloned trend lines back to the 80s. So for 40 years we've been in a very pronounced downtrend in yields. Yields have been coming down forever because bonds have been in their bull market forever, and I suspect that we're getting to the point where we're squeezing in between these trend lines, and something's got to give. And it's hard to know. Nobody knows which way it's going to bounce, which way it's going to go. I don't think that you're going to see much of a move up. I don't think it can go up that high before the Fed steps in, because I think the market has become addicted to low rates, low yields, and things like that. And so I think that if if this is going to go anywhere, it'll either, I mean, if it doesn't stay sideways, I'm more likely to think that even if we get a near term move up, you know, we could get a near term bounce up past this first blue line. And then we could get rejected as we get up near the 2 range and come back down, because I think the Fed will have to step in at one of those points, because I don't think they can afford to let the yields go out of control. So that's something that has been interesting to note. Also, we had that move up in yields over the previous few days as the dollar and as gold and silver were coming up. And then obviously the equity markets are up. And I had talked previously, let me actually go to the Russell. I had talked previously about the big Russell breakout. As you saw, we finally got that breakout. We had a couple of days ago, the markets came, we had a really huge sell down on the Russell, but I tweeted about this, that this is the type of move, you know, red day that you want to see, because what you want to see is this rally, this breakout come down and test the previous high, which was resistance and is now support. You want to at least test somewhere close to that before this move begins going back up again. That's what you really, really would like to see. It's kind of a similar thing to back before the move around the election of 2020. You kind of see this sideways range broke out and came back down, and then was able to move on up real quick. So you really want to see that in order to have a healthy market. You don't want it to be in this overbought state. You don't want to chase the momentum. You want it to come back and relieve some of that pressure. You want to get some selling done, so you kind of get a refresher there before you buy in and take a long position. But that looks good to me. We had a brief pullback on the S&P. It's actually really crazy. I heard them talk about this on a podcast. I forget which podcast it was, but if you count these days, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 17 out of 19 green days in a row, right? That's insane movement. You have to know that when it happens, you're going to get a pullback. You're going to have to get a check on that movement. But equities really look like they're melting up. Much in the same way, if you think back on the S&P, you see this trend line I have here. The last time we touched this level, on this trend line, and you guys know if you've paid attention to my channel that I've been adjusting this line slightly based on what the market's showing. The last time we were here, think back here, October into November, again, going into the election, you saw just this huge melt up right there. And we haven't looked back since then. So, again, people freaked out. We had that big move down. Let me show you the NASDAQ really quick, because I want to maybe divert a little bit and try to see if we can take a look at what's going on here. But big moves down on the NASDAQ. And when I say big, I guess let's, look, it was less than 4%. Now you can't really see that up there. I'm going to try to get this moved. Less than 4% move down, but everybody was losing their mind. And that's just, I think, a reflection again of how addicted the markets are to only the upside volatility and momentum. Something to, like, as long as we get these little, brief pauses, I don't think that there's anything wrong with what we're seeing. I think a lot of people are, trying to call corrections and things like that, but I don't see that right now. This is the Dow. We had the Dow breakout retest. You can see this was a perfect retest right here. I think I mentioned in a video a couple weeks ago that, like, this is the perfect buy spot. If you can get this resumption off here on a long position. So everything looks great. Equity markets are bullish. I'm not chasing. That's just me. I'm focused on a lot of other things, like Bitcoin, which, as we are here on Sunday afternoon, a lot of doomsday people out there. It's interesting to think that, The highest wick that we've had so far is up to 69,000 on the dot. We're, less than 5,000 down from that. This move down has been a little under 10%. Everyone's losing their minds. I mean, it's crazy to think, how where we've come from, how we were down here not too long ago, and we've been marching up ever since then. People are calling double tops, and so on and so forth. But everything still looks great. I feel like everything is still happening as it should. I still have the same price targets and date targets that I've been talking about on Twitter lately. You can see these are cloned most important trend line and crypto lines. I think something got messed up over here. That shouldn't be. It should be right there. But what I've been doing, I've talked about this a couple of times. Occasionally, when we get some decent moves or some decent pullbacks, I will place the most important trend line, like a cloned line, at various spots. And so the darker lines that you see here have been the most important. I do have some other ones because I was watching to see where the symmetry was. But it's pretty interesting because over the last week or so, week or two, I had forgotten to put a cloned line, and as we were getting these sell downs over the last week, I think when a lot of people were expecting that we broke this high over here, a lot of people were expecting we were just going to shoot off, and then we came back down, and I cloned the trend line. I had forgotten to do it. I cloned the trend line. I put it right here, and you could see we had two near perfect touches over the last few days. So once again, it's proving to be resistance and then also support. The market is respecting it still, so I'm going to continue to use it. And it'd probably be a decent idea. Maybe I'll clone it again and put it at the top of that wick right there, so that way we can track it. But everything there still looks good. Everything is still on time. A lot of people are calling this a Wyckoff, just like they were. Just like a lot of people were calling for another Wyckoff here in this first wave following the mid-cycle dip. A lot of people trying to point out similarities in between what you see here in these four little peaks versus what you're seeing now. I don't think it's anything to worry about. There's just a lot of people out there looking for these rolling tops, who think that cycle behavior won't play out as it always has the last couple of times. In the end, you can't be married to any particular view. You got to consult, all vantage points and be prepared to adapt and to change as early and quickly as possible. And be aware. I think the greatest problem that anybody could have is that they are so married to their thesis that they won't allow price to show them what's happening. So I think the thing that I'm concerned about as I watch is, what if I start to see price taking off? If price is taking off right here, maybe this isn't the right angle or view to look at, because I personally am expecting a 2021 peak. So let's see, we've got 2021 ending right around here. So if price just goes like this and we are at the beginning of December, am I going to allow price to dictate to me that I got to get out? Even though I'm looking for, maybe midway to later in December. And that's the thing, you have to let price show you what's going on. At the same time, let's say that we do make another little high here, but then we drop down and then we fail to make a higher high. I'm going to be watching this trend line that I've got right here and be watching that. If we break below that trend line, then that's going to be the alarm bell for me that maybe we are double topping or maybe we are getting this distribution. But again, you can't be married to any particular view, and you just got to be willing to adjust as much as possible. And so that's what I'm trying to do, and that's what I'm really trying to share and preach about on Twitter. And I'll say that here as well. The other thing that I wanted to talk about, which I thought was kind of interesting, is to look at Tesla. Normally, I don't look at individual stocks, but I thought I would this time around. Um, I don't own Tesla. As you can see, I haven't adjusted these lines in some time because I've got this red line for resistance, and that's obviously not resistance anymore. So I'm just going to lighten these out here. And I have to eventually adjust these other ones. But what I think is interesting is, if you pull back, let me turn this onto a line. If you pull back, it obviously doesn't look like much. But what I think is interesting to note is if you zoom it and you look at this, I mean, to me, this looks like it almost is. It looks like a blow off top. Although I know in terms of percentage, a blow off top should look a little bit different. But let me show you what I'm talking about here on a blow off top. So let me get this. Let me get the marker here. So you've got quick move up, slight pullback, quick move up, and then you've got this sort of like stutter step up, and then a huge sell down. And then what I'm looking to see here is over the next week, during this next week, are we going to get, are we going to get this to kind of come back up? And are we going to keep going? Or are we going to come up and then get this sell down? And like, is this the end of a blow off top? Or is it just going to go straight down? For examples, to kind of show you, again, what that can look like, I'm going to go to, I can go to my commodities and I'll go to my lumber. To go back here. So this one looked a little bit different because that little stutter that I'm talking about happened a lot lower. It kind of went, and then boom, right? But then another way that you could look at it is, let me go to my crypto BLX chart. So you're going to see the modeling chart here. But the reason I want to show you this is because I want to, again, give you a sense of what that stutter move looks like in a blow off top, because I'm wondering, my computer's not loading. Thank you. Because what I'm wondering, what I'm looking at is this, here we go. Let's see. Got to go all the way back so that this will load. Yeah. So, still got to go back. I don't know why. It's weird. My internet must be really slow, and that must be why I can't load this chart very well. Sorry about that, everybody. Hopefully I can get this. There we go. Yeah. So as I come forward, the reason I'm doing this is because I want you to see the blow off tops kind of lined up here, and you can see them cleanly on a line chart. So again, take a look. Let me unlog it so you can see what the move looks like, not on log scale. So you see we've got, like, in the pink is the 2013 Bitcoin blow off top, and the orange is the 2017 Bitcoin blow off top. And you kind of see that boom, like that, like stutter move up, and then a sell down, and then a bounce, and then boom. So it's basically the Wall Street cheat sheet, right? So I don't know, like I look at that, and then I go back to my Tesla chart, and I wonder if that's exactly what we're seeing. Even if you log scale it, it looks pretty similar. And I know that there's a lot being made about Elon selling his shares, and there's a whole bunch of discussion about like his poll, and did he really, like, was he already planning to sell because he filed ahead of time? Was he just signaling? Like, what was the deal? And it's hard to know to what extent the sell down was caused by him, like by his actual selling, or if it was something else. And I know that there are podcasts and other people who have looked at those kinds of things, so I'm going to leave that to them to talk about. But it was just something that I thought was interesting, and kind of gives you a sense of maybe what could happen with Bitcoin, and in the case of a blow off top situation. Because I think the thing with Tesla is that nobody, especially over the last few months, I mean, unless you were blind as a bat trading this chart, let me go back to the candles. Like, if you're trading based on technicals, then you bought, I mean, if you're smart and you were into buying Tesla, you would have bought there, and but so it's not to say that it wasn't a good chart to trade, but nobody expected these moves to take place. I know that there was a Hertz announcement and whatnot, but there's some huge moves. And one, when that kind of stuff happens, you should always expect a mean reversion, some kind of correction, because that kind of price action is unsustainable. But I'm talking more about the market psychology portion, because I suspect, because I was seeing it, on the internet, people, right around this area were talking about, oh, Tesla is going to, 2,000. People are talking about Kathy Wood's, price target of 5,000 for Tesla. And that's the kind of, market psychology that we're talking about when it comes to, thinking about where Bitcoin is going to go. As price increases, people are going to, it's going to surprise people, and it may surprise people in a good way. It might surprise people in a bad way, but I feel like that same sort of sentiment is going to play out. People are going to see price moving up, parabolically, and they're going to think Bitcoin's going to 1 million. And that's going to be exactly when it's time to get out rather than when it's time to buy. So anyway, just kind of a little aside to what we normally do here on this channel when we do these weekly updates. But that's the weekly update. So with equities melting up, I'm on the sidelines. I would rather wait for a more meaningful correction before taking a long position, but the markets are not crashing. So I'm not looking to short on the equities. Bitcoin is really the trade where it is. And then gold and silver, we got to wait and see. And you definitely don't want to chase gold and silver here. And so that is the update for the week. Thank you for your patience while I was getting this video out. Go ahead and like and subscribe and share if you found this interesting and you found the content helpful, and I'll see you guys next time.